The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. So let's check out where all our markets are at right now and get on caught up on the day, and then just see what all is going on. Well, right now we got the S&P. It's pretty flat on the day. It's basically down about a point at the moment. Nasdaq's down 24 though, so definitely been the big down mover of the day. We got Russell's up $1.80. We got the Dow up a mere 11 points there. Gold's up $13 over a 1% move, so nice move on gold. We got silver is up about 0.5%. Copper right now is down almost 1% on the day. Oil moving furious, down over $1 on the day. We also have natural gas. It's up about 1%. Both oil and natural gas had their inventory or storage, whatever, reports today, and usually not on Fridays, but had those today. So some big moves there. And looking on over at corn. Corn up $1 on the day right now. Soybeans down $1.50, so pretty flat on the ags. Euro dollar's up 65 pips. Pound dollar's down 16. Aussie dollar's currently up 65 pips. We got the euro yen is down $1.18 and almost a 1% move. We got the U.S. yen down 32 pips. The pound yen down 82 pips. We also have the dollar CAD down 50 pips and the dollar franc up 52. It's a little mixed bag of results there. A little bit of difference in strength and weakness on the dollar. So dollar sort of at mid-level right now, not super strong, not super weak compared to all the currency pairs. CAD, though, one that is definitely showing some definite, starting to actually show some definite strength. So that's, pushing that dollar CAD down. And Aussie also showing some strength compared to the dollar. So we're seeing that Aussie dollar right now, it's up. And so that lines up with just the strength across the board. Now let's look at some of the reports. We had a couple of news reports come out today, and we're talking about these this morning. If you missed it, definitely go back, check out the archive. We got the Bull Bear Binary Trading Hour every Friday morning. You can tune into at 10 a.m. Eastern Time, and let's look at how the numbers came out. And let's see, we got a heads up for you. Just make sure you do put this on your list. Bernanke is going to be speaking. Obviously, it's not like it's not a major speech, but he's still doing a speech. And there'll be somebody there listening to what he says, and they'll be tweeting it or posting it or whatever, and that can have an impact on the market there going into the end of the day. So again, that speech is going to start at 2:30. So just be aware. Again, that's one of my big things on news is be aware that it's happening. All right. So looking on over here, we got the Nasdaq. It's been, like I said, it's been the big mover down on the day right here. And we got a sell. We ended up, 35.54, kept moving on down, and we're trailing our stops. And one of the things I wanted to go over with you today was talking about, how do we trail those stops? Where do they come from? What do we do? What do we? How do you trade with them? What's the actual application side? It's like, okay, the levels are cool, they are really accurate, but what can I do with it? So I wanted to make sure that you understood accurately how to take advantage of those stops and go into them. So let's look at it. And what I do is we post these every night around 8:15 Eastern Time. They get posted right here inside the scanner. You get access to those. And if we look down here, you'll see we put all of them on there. And then you can go in, you can plot them on your charts. Okay, so whatever charting platform you use, you can just draw the lines. But what I do is, let's say I take a short trade, is I move my stop to be 5 ticks above. Now, you could use 5 or 10-minute bars, so I can switch this over to 10 minutes. We can look at that as well. But, basically you can get the same result, a little earlier entry. But, so you get 5 or 10-minute bars over here. And when you use those 5 or 10-minute bars, then, I put it 5 ticks above the high of the bar that closed below it, or 5 ticks below, or 5 ticks above the high that closed below it, or 5 ticks below the bar that closed above it. So, for instance, we go over here and we look, and whenever I'll use this line. This is my stop line, by the way. So if you've been following some of my charts here inside the platform, moves on down. It closes below this half deviation line after we get an entry. So now my stop is literally 5 ticks above that. And, so I put it like right up here. And then it closes down. That's great. Keeps going, closes down again. So I move my stop down again. So, and why do I like this stop so much? The main reason I like using this stop method, it's very objective. And I'll look at the high. So I'll go, okay, 35, 39. And then, NASDAQ ticks in quarters. So then I'll go, okay, well, 35.39 plus $1.25, 5 quarters, okay, is going to be 35, 40.25. And so I'll grab my stop here and I'll move that down to 35.40.25 right there. And it's an objective way to move a stop because profit and loss is not a good way to move a stop. A profit's not a good way to move a stop because, you see that green and you're so happy you're finally making money on the trade that, you bail. You hop out of the trade. And then you end up giving up a ton of move because you're like, man, this thing just made a lot of money. I'm up. You see that green, man, there's dollars going up. And, of course, then they oscillate on you. And, like, let's say it comes down here, and then all of a sudden you spend the next hour where nothing's happening. And it just goes up and down. And now you're making and losing, $100 on your P&L. It's just sort of fluctuating on you right there. And that can be very hard to stay in. So by having this method, it allows me to, objectively move my stop, let it do its thing. I mean, even looking at where we're at right now, we moved down again. We got below the 0.7 deviation line. And so I moved my stop again and, came back down, and then it came back up. Be very, very tempting just to hop out, right? And is that horrible? No, not unless you end up giving up another 20 or 30 points. So not necessarily a horrible thing, but, you could be giving up a lot of money. And, it's one of those things that we like to say as traders, well, you never go broke taking a profit. Well, yeah, you do. If you take small profits and large losses, you go broke taking profits. So, because you don't take enough profits. And so this allows this thing to oscillate, do its little thing, do its little dance, and keep moving around. And so you see, even through all this oscillation, we're still in this NASDAQ trade over here. And so move that stop down, and when it hits the 1 deviation, once it closes below that, I'll move it down again. So, really, really simple method. And then over here on gold, we go to check this out, and, you can see we got, our buy. We actually got a couple of them, but we got our buy signal right here, getting in right around 12.29, moving on up. And so as it closed, above the deviation level, moved it, 5 ticks below. Then it closed above that deviation level, so moved it 5 ticks above the low. Okay, so it's pretty simple. I mean, what bar closed, above it? So right there, we got a bar that closed above it, and we moved it. Now, here's the next step for you. Okay, this step can somewhat get a little bit overwhelming at first, but if you stay with me, it's a really, really simple strategy. Okay, when it closes above, such as this bar right here, let me blow up and zoom in. Okay, that way you can easily see that close. So it closes right there. Just above the low by, barely, or just above the high, closes just above the high. Gotta swipe my chart. And we got a close of 1236.2 with a 1236 deviation level. Now, it's up to you if you want to do it if it closes at it. I really like it to close above it because I don't want to move my stop too far. I want to give it room. Anyway, so it goes in, it closes above it, and I move it. Now, do I have to wait until it hits the next deviation to move my stop again? No, I can actually use this exact same method. So if it closes below the deviation level, but then closes back above the deviation level, like it did right here. See how we closed above, then we closed below, and then we closed above again. So if it closes above and I move my stop, and then it closes below without stopping me out, and then closes above again, I can just tighten it up again. So I go over here, I look at this, like, okay, what's the low of this? 1235.2, 5 ticks below that is going to be, since it ticks in dimes, so I'm going to take away 50 cents. And I'm going to get 1234.7. So I'm going to move my stop on up to 1234.7. All right. Well, then it closes below it again. Okay. And closes above it again. Now, maybe this low is a little bit lower, but not low enough to stop you out. You never move your stop backwards. Only move it in the direction of your trade. And so I'm doing this right here. I see it, okay, it closed below the low, then it closed above the low. So now what's the low of this? Well, the low of this is 1235.3. So that actually would move it to 1235.8, 5 ticks below. So, I mean, it's just a 1 tick move, but it's $10 more of profit I'm protecting while still giving it room to run. And it's the simplest, most objective stop loss method I've ever come up with. So I got other ones. I got like 8 different ways to trail stops. I use a variety of them depending upon what strategy I'm doing. But this is, one of the simplest and, my most favorite just because of its simplicity of, hey, time to get out of the trade. And, but right now, so we're still in the trade and, and I mean, it'd be very tough to stay in this trade because as this thing was going, this thing's been oscillating in a range of 1234 to 1237. That's a, $300 range in P&L fluctuation. So, if you got in over here at 1229, then, up at this point, let's just say right here, at, not 1239, if you got in at 1229, and you're up at 1235, then you're up $600. So you're saying your profit go from 900 to 600, 900 to 600, 900 to 600 over the course of, a couple hours. And at a certain point, either what most of us do is it goes up, it comes down, it goes up, it comes down, and we're just like, I'm just going to take it now because I don't want to lose it. Or maybe it's up at the 900, and then we just take it now. And sometimes that works, and sometimes we give up a lot of money. Okay? One of those examples where you easily could have given up a lot of money, even compared to where we're at right now, is, right here, this 1 hour. These are, 10-minute bars. So 10, 20, 30, 40, 50, 60. There's an hour of time where we're basically just staying in this range of 1234 to 1232. So you're seeing a $200 fluctuation in your P&L. But we moved our stop up basically to break even as soon as this bar closed above. So first stop was like right here. And then the next stop, we move up and we wait for it to close above. It closes above. Then it closes above again. And so we have our stop at 1234.8 right now over on gold. And it allowed us to be patient and allow the market to do all of its, fun little dancing and oscillation on the trade. Natural gas had inventories come out today. And so it was flying up right here. And let me pull up real quick, and I'll go over the numbers with you. But natural gas came in, let's see, negative 97 versus negative 125. So better than expected, okay? Which, whatever. At the end of the day, you see, if the supply goes down, shouldn't the price go up? Well, you got to dig into the report, and you can link onto that. You can read. It's not just that. It's, there's so many different pieces, and they go into all this information and everything else. So yeah, theoretically the price should go down, but fundamentals don't matter. You got to follow your charts. You just want to be aware of the fundamentals, so that way when you're doing your trades, you're in the right place at the right time. So we'll continue on this natural gas exploration when we get back, and we'll also talk about oil and how that did when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, come on back here to the Diagnostic Trading Hour. So let's wrap up the natural gas example. We got over here and looking at natural gas, where everything's going. It was flying on up, and this happened literally just right here before, right after, about 20 minutes after the inventory report. We got the go long signal. Okay, so the market starts flying up. Anyways, we move our stock to 5 ticks below the low of this bar. That's right there, because it closed above the high of this deviation. Okay, and then when we did that, over here we got stopped out of the trade. So for a nice profit there, 4.259 up to, let's see what's the low of that, 4.367. So very large, good profit. And we're glad we did, because look at it. Now it's starting to move back down. So we protected our profits, but we were objective. We let the thing move on its own. And again, on this one right here, we started here. It moved above this deviation. We moved it. It moved above this deviation. We moved it. And then when it fell back down, market's done. Call it a day. Or, look for the next, potential trade entry. So far, I don't have any more entries. If I look over at oil, okay, oil, similar, same setup right here. We go down, the market's moving down, and haven't had a chance to move a stop, just oscillating. This is sort of the gut-wrenching time. This is a good time if you're trading Nadex, with no stops, or maybe you're trading the hedge strategy that I was talking about this morning, where you're hedging your oil contracts. If you weren't hedging your oil contracts, you definitely should have hedged them around 11 o'clock when the report came out, because you never know. It wasn't actually that big of an impact on the report. I mean, we didn't get some massive move, but I mean, it could be a $2 move in, a minute. And so you just want to be ready for that. But anyway, so it comes on down. You have the hedge on. The report comes out at 11 o'clock. And so right here, this is when the bar closes, right there at 11. And so, really, I mean, if you would have exited right before, it would have been a great trade as well. But either way, we moved our stop because that also happened to be the bar that closed below the deviation. So, again, we go in, and we had our entry, and then we have our first stop right here. We move it down because this bar closes below. We have another bar close below. There we go. And then we get stopped out of the trade. That's fine. Things moving around, waiting on the next entry trade. Get another trade that we just got not too long ago. So we got a short over here at 12.50, and at the price of 94.44 right there. And so sort of waiting for the market to officially close down. Now, some more tips for you. Okay, so let me give you a couple tips here when looking at this. So we're really waiting for it to close below this price right here of 94.1 or whatever that is. I got it so zoomed in, it's a little harder to see. But 94.18. Okay, so we're really hoping that it closes below that bar, because if that does, then that allows us to move our stop. Right now, technically, we haven't moved our stop at all. You do have. I want to give you two variables. Okay, to this strategy. One variable is that if it gets to a deviation level, okay? And when I say a deviation, I mean like a one deviation move level. Okay, so whether that be -1 or whether that be, +1, or whether that be a one move from the most recent high to low, or like I like to measure right here, I'll actually look in and measure, here's a deviation, here's where it's moving up. And it actually has moved a deviation from high to low at this point. Any of those, move your stop to at least break even. Okay, so that'd be method one. Just let's at least remove our risk. Okay, because what if it does just bounce off that thing but doesn't close below it? And so an example for you, if we start from the beginning here, we got in. The market's moving down. It touches this deviation level, but it doesn't close below it. And that was a big move. Okay, that was a massive move. And you're going to want to just either take profit or tighten your stop immediately, and the market bounces up and can easily knock you out, and you missed out on another, maybe $1.50 move, which is $500 to $1,000. So, I mean, it's not anything just to, not be concerned with. So, you could literally go in and literally just go, I know my stop's up here to begin with, 5 ticks above the high where I got in, but I'm going to go ahead and move it now to break even, and that's it. When you move that to break even, at least now the pressure is off. There's still that, I don't want to see my profit go away, but you are able to at least embrace the fact that you don't have to worry about that profit becoming a loss. And I'll go into a couple other methods for you as well. But you got the first one down. Now we're going into a few more. One being moved to break even when it hits a deviation. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for his subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of this special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so looking over here and just checking out oil. So what I was telling you was when it hits the when you have a price hits your deviation level, we're talking about trailing stops. One choice. This is optional, but it does help with the psychology of trading, and it's one of the aspects that I've learned in developing trading systems over the years. Is not only do I have to find get rules that, let's just say, work, okay, or seem to work, but I have to factor in the reality that I'm part of the trade because I'm the person who has to execute it. So I have to make sure the rules are in such a method where I will actually follow the rules. Just an off-the-wall example, a $3 stop loss on oil, which is like $3,000, okay, may work absolutely fantastic on your system. But are you really going to stick to it? Okay? So you need things that, whenever you're developing your system, don't just like when this and this and this happen, then I do this. Actually, think about the fact of the reality of you being the person there making the decision to decide to actually do it when it does happen. Otherwise, what will happen is you'll keep changing your rules every 5 minutes as you're trying to adjust it to, well, I don't know, I see this, I see that, all that. And it's good to, be aware and see things, and there's nothing, I literally see, there's nothing wrong with, as long as you have a system guiding your overall principle of trading, defining your entries, exit, stop losses, trailing stops, all that. There's nothing wrong with reading the market when you notice something's up, making adjustments. to a certain point. But if it becomes where like 80% of your trades are adjustments, then you're not really trading a system. So you want to make sure that, you do have a system you can trust and use those rules on a consistent basis. So anyway, so it gets down, it touches the deviation. It hadn't closed below it yet. Massive move, or at least what looks like to your P&L, a massive move. And moves on down 40 ticks. Now, one of the things that will help you with this, and it sounds sort of nuts, but I was taught this by one of my mentors, and this only works, okay? This only works if you follow your risk management plan, meaning I will not risk more than this many dollars on a trade, which says I can do this number of contracts, and you are really okay with taking that loss. Not that you want to take the loss, but it won't stop you from taking 2 or 3 more trades, 4 more trades, whatever, at that same loss level, okay? My personal rules, I like to have, I want to be 6 net losers in a day before I stop. If I get 6 net losers, it's a day I need to stop, okay? So, and because that's pretty rare to get 6 net losers in a row like that. Not even in a row, but like if I win 3 and I lose 6, okay, well, right now I'm positive 3. But if I go and I lose 3 more, yeah, it's definitely, game over. Let's call it a day. And so I want to make sure I, have my risk management built accordingly. But if you will do that, if you'll have your risk management set where you are okay with the loss, you're not risking too much because you're trying to get rich tomorrow, then what you can do that is actually extremely helpful in trading, and it sounds weird. It almost sounds like it's a bad idea, but it's actually a really good idea. Again, only if you have good risk management is a good idea, is to literally hide your P&L to make it where you can't see it. Like in the Nadex platform, you can actually remove the column. In NinjaTrader, you can at least turn it into points instead of dollars. And yeah, I know your mind can calculate it and all that stuff, but you can at least make it points. In some things you can hide. So just literally not like staring right at the P&L the entire time, because the reality is your profit and loss, especially the fluctuation thereof, has nothing to do with the market. It has to do with maybe you interfering with your system, but has nothing at all to do with the market. And you shouldn't be staring at things that have nothing to do with the market. You should be staring at things that have something to do with the market, like the chart, not the P&L over on your DOM, okay? And if you do that, it allows you to remove a lot of the emotion from trading. Constant battle for all traders. To remove a lot of the emotion. So one, if you don't risk more than you can really handle, okay? I mean, you have to be really honest with yourself about this. It's one of those, sort of like, playing golf. I mean, you got to call it whenever you actually, somebody didn't see that you accidentally bumped the ball or whatever. So you got to, this is one of those, you got to be honest with yourself. And, but if you'll be really honest with yourself, you'll have risk that you really can handle, then you can hide that P&L, and it will benefit you because you won't feel that up and down, I'm up 500, I'm down 500, I'm up 500, I'm down 500 on the trade, and therefore it mentally exhausts you, and psychologically, just emotionally exhausts you, and you end up just closing the thing out, and you make a decision based on P&L that had nothing to do with the chart, okay? And so let's say we get there, it goes down, not because of your P&L, but it touches the deviation. That's the rule you decide to implement. If it touches it, I tighten it, okay? And then when it closes below it, then you tighten it again, okay? To 5 ticks, because right here, right above that one, because it's 5. It's either at or below. Now remember that I said that's a variation. You can use at, you can use below. I prefer personally to use below, okay? So the deviation being 94.81. The close was at 94.81, so it did not close below it. So technically my stop is still right here. But on the very next bar, it does close below it. And I got a tighter stop. So now I can move my stop down to just 5 ticks above the high of this bar that closed below it. Move my arrow out of the way so you can see the close right there. Okay? And so it's moving down, then it moves down again. So now I can move down again to 5 ticks above the high because that one closed below the low, and then it stops me out. That's great. That's an awesome trade. Selling at 96.26, and then buying back over here at 94.66. Nobody's going to complain about that profit right there. So over $1,000 on that trade. And then we'll just keep going. Depending on how many contracts, and whether you're doing Nadex spreads or oil or mini oil, of course, all that fluctuates. But just as far as the point difference there. Then we get another signal. So what do? Well, Well, right here, it triggers. Boom. We get the entry. It's going down. It's going down. It touches our deviation. Remember I was just talking about how you get sort of freaked out. It has that big drop. And so we still have all the risk exposure up here. So we remove that risk exposure. We move our stop to break even. Then it finally closes below it. And again, this is optional to move it to break even. You got to choose whether it's worth removing the risk to potentially get stopped out before the trade's over. But it is nice to get rid of that. Right here, finally, just now, okay, we just finally got a close below. If I can click on the right thing here. Close below the low here in the last 10 minutes. That low is 90. The low there, like I said, the high is 94.19. So we got to add 5 ticks to that, 94.24. So now we move our stop on oil down to 94.24. Okay? And so now we've protected. We haven't locked in, okay, our profit, because if you locked it in, you're done. You know, I mean, you could say you locked in that portion of the profit, I guess. But we protected our profit, and we're allowing it to move further. All right? So we got all that going on. But when it hits a deviation, I said move to break even when it optional. But definitely when it closes below, then tighten it. If it closes above and then below again, tighten it again if you can. Like if you can move it further, down or further up if you're, long on the trade. Once you put that together, the next thing that I want to talk to you about is actually like a deviation high to low move. And where maybe you're not at a 1 deviation mark. Okay? So in this case, we're right at a 1 deviation mark, but that obviously is not always the case. And sometimes you're going to hit that 1 deviation move, well before it ever gets there. And so you may want to actually sort of have your own, I guess you could say, deviations along the way for, moving that while you're waiting for other bars to happen. So let's look at an extreme example. We got gold right here, okay? And I'm going to zoom in on just this trade right here. And so we get a trade to go long right here on this trade, okay, for, whatever. I mean, there's 1,000 systems out there, whatever system you're using. We get a trade to go long. Thing flies up, right? Look at that. But it didn't close above it. And these, again, the ones that make you nervous, okay? Because you are very aware that the likelihood of this thing pulling back is pretty high. These things bounce off deviation levels all the time. So we got a couple things going on. One is, we've now hit another deviation level, so I can move my stop from, being 5 ticks below this low to break even. So, boom, moved up, I moved it up. Great. But something else also has taken place. Okay? And the other thing on here that has taken place is that we've actually moved 1 deviation from the low to the high based on yesterday's settlement. So let me see if I can zoom out and back in. So the settlement we actually got, it came down like 0.3 or so here, and then it ran up to 1. Okay? So when it ran up to 1 deviation right there, that was a 1 deviation move, and it's pretty easy to track, as like, okay, a deviation is this many points, and so therefore I just literally go, okay, well, from the low, from settlement to the high, have I hit a deviation level? So since I know I've hit a deviation level, that gives me another reason to move my stop. And a deviation level may not be always a plus or minus 1 deviation. Okay, so what I'm trying to get across here is it may literally just be the low to the high. So if it moves down 0.3 and up, well, let's say it moves down 0.4 and up, 6. That you could basically look at that level, that price, as a deviation. And a way to manage that is you could draw a line on a chart, and you can go, okay, well, here's the low, and if that's the low, then, let's see here, what is the low? We'll pull it up. All right, the low since settlement, okay, because remember, gold settles a little sooner in the day. The low since settlement, yeah, basically I have it right there. So that's the low. And then I can go, okay, well, a deviation, let's see, what is a deviation on this day? And I can pull up the scanner to look at that. So I can go, okay, over here on the scanner, if I go down to the, the gold contract, what I see is we got, 15.4 is one deviation. So I can go in here and use rulers. You got to have a ruler function or something. And I go, okay, so from low to high, until I can measure out that, one deviation move, 15.4 right there. And so what that'll show me is that now I can draw that line, which is literally pretty much right at it, literally. It literally moved perfectly one deviation from low to high. So as soon as it touched that, I'm like, boom, deviation. So even if there wasn't a deviation level there, I could have tightened my stop. I also could have moved it to 5 ticks below the low of this bar. So I have my stop from here. Now I move it up to here. Okay? And eventually, the nice thing is it does close above. So we'll zoom back in. Make this easier to see. This third bar later, it does close above it. And now I'm really able to tighten up my stop. And so what do we got? A price there of 1232.2 minus 5 ticks from that. We got 31.8. So I got to get the brain going there. 1230.8. So we got it right in here. And then we end up, getting stopped out right there on the trade. And we make a nice little profit of getting in right here at a close there of 1224.2. So 30.8. Not too bad. 6 points. That's like $600. So just by using that simple stop method, and then now waiting on a new potential entry. So which I'm usually looking for red, green, all that fun stuff. If you're wondering, by the way, what these numbers are that you're seeing, those are the strikes. If I'm going to do binary strikes, and I'm going to do it in the money premium collection, I'm going to look to buy a strike at or below that price. So if it's a sell, to buy or sell a strike at or above that price to collect premium on it. Okay, so we got this trade going, still going. Okay, and we can look and see. There's an additional buy if we wanted to hop in on the trade, but along the way here. We got to move up, closed above. Got to move up, closed above. So now let's get rid of all these lines because you add too many, right? It becomes impossible to see anything. And so we get stopped out right. We're not stopped out yet. So right over here, we're still going. Looks like it is starting to retrace a little bit. If it does drop back below that price, and that price would be 5 ticks below this low, 1235.2, so we'd be looking at 1234.8. Then that's when I would want to be out of my trade. Okay? And that's if you were still trading. I mean, you may have got out already, and here's the reason why I say you may have already got out. So because maybe you exit before the gold market pit closes. So if you got out at 130, then you're out right there already, which is nice. So that worked out well. So I like to close my trades out usually at pit session close. It depends upon how you trade. Do you hold trades overnight? Do you close them and hop back in them? What do you do? What's your margin? All that fun stuff. But hopefully you can pick up a few things there using those deviations. It's a really, really cool, very, very effective method for trailing stops on trades. All right, we'll stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so we decided to wrap up there, and was going through. I got a question about what stops. Where did I have my stops? The Nasdaq had it at 1340.25, so that one's still standing there. We got gold. Either you were out at 130, or I had a stop at 1234.8, but I just got a reversal signal. I usually don't trade during this time on gold, just after pit session between 6, but I just got a reversal signal on it. With that, I would also be out immediately. So right now at 1230, 6, 1235, somewhere between there, depending upon if you're in the den or not. And then also on oil, stop is at 94.25 currently, which is just above the 1 deviation level. So we're getting really close to that one right now. We're at 94.21. So we're about, a few ticks, or first far as the high, 94.21. So we're just a few ticks away from that. And, the stop, could be used as a reversal signal. I usually don't use it. I like to look for my entries, and then I like to use all my other things to draw my stops. But hopefully, like I said, I just want you to really, have a plan. As a trader, make sure you do have not just a plan on, the entries, but the plan on the exits. A couple things that, I've been taught that I teach and I say all the time is, or are, whatever, that, the one thing you have control over on a trade is when you get in. You don't have control on, The only thing you have control over is getting in where you want to get in. Okay? So, I want to get in at this price. I want to get in when this happens. And that's when I'll execute my order. Like, that you have control of. Don't ever give up that control. And that basically giving up that control is what leads to over-trading. The next thing that I've been taught, is, like obviously you don't have control where you get out. And once you're in, and, like when I went whitewater rafting, you get in and, I don't remember, I'm trying to think, I don't remember exactly what town we were in, but I was going whitewater rafting with a bunch of friends, and one of the canyons we were going through was called Pinball Canyon. And it was for good reason, right? Thing was just literally, you're just hitting boulder after boulder after just bouncing all over the place. And I fell out. Fortunately, at the end, so I didn't knock into a bunch of rocks, but I fell out. And, somebody helped me in. I didn't have control where I got out. Okay? Literally, I was doing everything I could to stay in. And I got knocked out. And, and then, if you're trying to decide where if you haven't thought about where you're going to get out of that raft, trying to steer to the side, that's an extreme example. That's just the market moving against you. But as far as, your profit management strategy, whatever, when you're going to be done rafting, if you haven't thought about that, then one, you have no plan. You have no business getting in unless you have a plan. Imagine going water rafting. You go down 3-4 miles. You haven't thought about where you're going to get out. Well, how are you going to get back? Okay? Have you planned a time and a place and a location, so somebody can come pick you up? Or are you just going to depend on the CB radio working or, whatever it is that you got? So you want to make sure you have that plan before you get in because it gets emotional. And, if you don't have it, trying to make that judgment call on the fly without at least a guiding system, such as something like, this, like using deviation levels or whatever method it is that you use, you're really setting yourself up for, failure in trading. So, obviously I just want you to be as successful as possible. So make sure you set yourself up for success. And it doesn't guarantee that you're going to make profits, but it is definitely a requirement that you have that plan in place before you enter in the trade. All right. Well, y'all have a great weekend, and Happy New Year again to everybody. And I will see you on Monday right here on the Diagnostic Trading Hour.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.